everyone, I'm Laurel Mintz, GP of Fabric VC, and this is Oversubscribed. As you know, we invest a lot in fintech startups, and I think it's important to call out within every industry what a VC like Fabric is actually looking for when we are making an investment decision. Number one, I would say, is a large addressable market. We've heard brands pitch, and you see the slide deck say TAM, SAM, SOM, total addressable market, et cetera, et cetera. I think a lot of that is kind of BS. So I want to also call out that you don't want to just say there's this huge market. You want to make sure that you're also drilling down into the SOM, which is what part of that market you are actually able to service. It's a more realistic approach to pitching your brand and capturing the amount of market share that's going to be required to make your brand really successful. Number two, I would say, is making sure that there is a scalable business model. So thinking about what does that product roadmap really look like for a fintech brand, and for fintech specifically, and for most verticals, you can't just have a one-off product or service. It needs to be something that is repeatable, consistent, that drives top-line revenue for the company. I would say the third piece is looking for founders with deep technical expertise, or at least a team that covers both of those avenues. You want a team that has marketing expertise, industry expertise, but especially in fintech, where there's so much regulatory issues, you want to make sure that the team has deep technical expertise and can build product the right way, and then of course have a legal team to back it up with the regulatory compliance issue, which, I mean, that's really number three or four, I think, is making sure that you have actual regulatory compliance. There is nothing worse than being in a highly complex regulated market like fintech, like healthcare, building a product that you think is great, and then having the government come after you, or the regulatory body of your vertical come after you, and you have to shut it down. And unfortunately, we have seen this happen. And then I would say the final piece that we like to see with fintech startups that we invest in is, of course, early traction. Now, on Fund 1, that didn't necessarily need to be revenue. As we launch into Fund 2, we're going a bit more upmarket, so we do want to see about a 40K MRR, that's monthly recurring revenue. But for early companies, we also just want to see how your users are using the platform. What is their, how many times are they coming back to use the platform? What is their time on platform or on app, daily, weekly, monthly? And making sure that they are not churning out of the platform that you've built. So there's a lot of statistics that you really should be looking at and sharing with your VCs as you're out there fundraising. And I hope that you have paid attention and listened to a few of the ones that we at least want to see.